This is a volatility measure across all asset classes, and you can see it's kind of declined to the lowest since January, and then it's kind of gone back up. Overall, it actually implies that the risk on carry trades are still there.
Markets are definitely confused with all this noise. The question is, what's the end game here? And the fact is, at the end of the day, the US has decided what they're going to do with NAFTA, what they're going to do with China. So despite all this noise, we are going to have some decisions that will have to take place relatively soon. So if all this flip-flopping is a negotiating tactic, might be unconventional, but if at the end it does lead to trade deals and not a trade war, that will be very positive for markets. But for now, the markets cannot ignore all this noise and is not
But they are, aren't they?
React.
To a large extent, they're ignoring it. Is it because they don't know how to price it, or is it because, as Vincent says, everybody thinks that actually at the end of the day, even the president doesn't want a trade war?
They are ignoring it from the point of view that volatility has not increased by as much as one would have expected, particularly in FX market. But at the same time, it is keeping the markets away from taking a directional view. For instance, in my market, the dollar should have been much stronger given the data, given the hawkish Fed. It has not happened because of all this policy uncertainty in the US.